Hey y'all, back again with another stock market video. Now, before I continue, I want to say I don't wear short socks and I don't short stocks. Now I'm here on my kind of, I guess you call it janky Wall Street. It's not the premium Wall Street. I'm not wearing a suit. I'm just wearing some gym shorts and some old tennis shoes. And before I continue, I want to remind everyone this video and all of my videos are for entertainment purposes only. They should not be considered a recommendation to buy or sell a security. I'm sharing this video and all of my videos for entertainment purposes only. And with that being said, I'm going to dive right in. So I've been recreationally trading stocks since before internet brokers. So it was back in the day where you either had to walk, you could catch a subway, you could catch a bus, you could ride a donkey, but you had to go down to your brick and mortar broker to pass the funds over to them and say, hey, I want to buy X number of shares of blah, blah, blah. So markets have changed, needless to say. The online brokers have made stocks a lot more volatile, meaning that in a shorter time frame, because of the surge of volume due to the convenience of being able to trade from anywhere with an internet connection and an online broker, it's totally changed the game. So I got a strategy, and this is for entertainment purposes only. Again, it should not be considered a recommendation to buy or sell security. It's just for entertainment purposes only. But for entertainment purposes only, I dabbled with dividend plays. Now, something entertaining to research. If you research stocks that pay dividends, now these can be stocks, some of them pay a dividend monthly. Some of them pay a dividend quarterly, which is 4 times a year, a calendar year, every 12 months, Some of them pay just annually. But if you look at something called an Ex-Dividend, the Ex-Dividend date, and you can look at the specifics or the details rather for any stock that's a dividend paying stock, and you can look at the EX date. Something I like to do for fun is find a variety of stocks that pay dividends, and I put them all in a spreadsheet, the ticker symbol, and then I put the EX-dividend date in the spreadsheet. And then I also put the pay date in there. And if you want to be more descriptive, you could put the dividend frequency if you wanted to. Now, keep in mind that some stocks, just because they may pay a certain dividend at a certain frequency, they could discontinue that dividend. They could change the dividend's frequency. They could change the dividend payout, Hypothetically, maybe it's $1 every quarter. So for one share, if it was $1 a quarter, one would expect to probably receive $4 per share throughout the course of 12 months. But those things can change. But what I like to do, once I've got it all in a spreadsheet, then I sort by EX-dividend date. Why do I do that? Well, it enables me to see multiple stocks that have staggered ex-dividend dates. Well, why is that cool? Well, what it enables me to do is then research those individual tickers. Historically, how volatile are they? I mean, are we talking rapid percentage decline, rapid percentage increase? Or do they typically trade somewhat around the same price per share? I'm looking for dividend-paying stocks that typically stick around a certain dollar amount. Now, once I've identified those, and then I've got my spreadsheet containing the ex-dividend dates for each, what I then do is I map out reminders. I use an iPhone, and there's an app on there called Reminders. I set a reminder prior to the ex-dividend date of one of the stocks. And I do this for January through, now keep in mind, a lot of these dividend paying stocks, when they announce their upcoming dividends, they may do it for several months. But again, be forewarned, they could always change the ex-dividend date. They could always change the dividend amount, and they could always discontinue it. So keep a close eye on it. But what I do is map it out, at least for a few months. Obviously keeping check on each ticker before I take action. So what I'll do, let's say starting out in January, I know that, and this is all fictitious for entertainment purposes only, but starting out in January, I know that January the 9th is the ex-dividend date, that the first occurring ex-dividend date for one of my fictitious tickers for that calendar year. So what do I do prior to January the 9th? Well, I exit out of another position that I hold a large quantity of shares in. I put all those dollars into the one that has the ex-dividend of January the 9th. I do it before January the 9th. And then guess what I do? On January the 9th, or any day after that, I sell all those shares. But since I possess shares of that particular stock prior to the ex-dividend date, and since I didn't sell those shares until on or after the ex-dividend date, I should, and again, nothing's guaranteed, but I should receive the dividend for that. So hypothetically, if you've got a stock that pays, let's say, $1 dividend quarterly, I dumped a large amount of cash into that, prior to the 9th of January. If let's say hypothetically, I acquired 1,000 shares. Well, if it pays $1 per share dividend, hopefully I'll get $1,000 on the dividend pay date. So then once I've exited that position, those funds are freed up. Now, check with your broker. Sometimes it takes a few days for funds to what's called settle before they're eligible to be reinvested. So take that into consideration. Check with your broker and see how many days that typically is. But then what I'll do is I'll go to number 2 on my list. So let's say hypothetically, the ex-dividend date in my spreadsheet for the second stock is January the 17th. Well, I've got this, large amount of cash because I sold the shares of the first stock. I've just got to put those in there before the 17th of January. And then, after the 17th, I can dump them all. And I've got cash again. But let's say hypothetically that stock paid let's just say a 50 cents per share dividend. And I bought, let's say 1,000 shares. Okay, well I'll hope to be able to receive $500. And then boom, in my spreadsheet, what's the next ex-dividend date? So it's kind of an interesting thing. Now, the flaw with this entertaining strategy, again, it's just for entertainment purposes only, but the potential flaw with this is that if any of these stocks experienced a radical correction, and if, you don't know what's going to happen. There could be just devastating news announced. There could be something shady with the company going on. On the flip side, there could be a positive event that could send the shares way up and make one ponder, well, should I sell the same share quantity that I bought in, or should I just sell enough to collect my initial investment and then keep a stronger position in that? But you see what I'm saying? So you really don't know. So it's a gamble. But if you've got a list, if you take the time to assemble a list of various stocks and various ex-dividend dates. I mean, wow. I mean, if there's little to no price per share fluctuation, I mean, once someone's built up a substantial cash position, I mean, hopping in and out of various plays is, I mean, it can be very entertaining. But what I like to do, I don't leverage obviously, never put all the eggs in one basket. I don't leverage all of my position and speculate with with one ticker. You know, it's a matter of personal risk tolerance, but I mean, sometimes, I mean, if it's a ticker that's been historically stable, you know, I may leverage 30% of my total portfolio. And I mean, that's, you know, it's a risk reward type scenario, but I've tried to pivot away from penny stocks, although I still love penny stocks. I love all the detective work and the bashers and the cheerleaders and just the overall shady nature of the over-the-counter bulletin board, the OTC markets. But I don't know. I think this dividend play hopping is a new addiction, and I mean, I don't know. I mean, like I said, this is for entertainment purposes only, but y'all know more about the stock market than I do. Comment below. Tell me what you think. I mean, you're not going to offend me. I'm not, I'm easily offended. Ooh. No, I'm not. I could care less. You can leave your mean, nasty, and vicious comments down below. I would appreciate it. Or if you want to say something nice, you can do that too. But, you know, I'm here to entertain, and I enjoy y'all's feedback, regardless of the tone. So thanks for your viewership. Be sure to subscribe. Check out all my videos here from my little jankified Wall Street. I mean, I got weeds in the street. But again, as a reminder, I don't wear short socks, and I don't short stocks. Pretty much meaning that, if you can't figure it out, that, you know, I'm open to a reasonable degree of risk, but I personally would never allow myself to open myself up to the possibility of infinite losses. And that's, if someone's involved with shorting, that's where that comes into play. So I'm only going to lose what I throw at it, and it may be 100% loss, but I'm not going to lose more than 100%. So hope you found this video to be entertaining. Subscribe, ring that bell, and check out all of my stock market videos for entertainment purposes only. Thanks for your viewership, and y'all have a good day. Hey y'all, Captain Irix Guy here. I hope y'all enjoyed this video. If you did, please be sure to subscribe. It's youtube.com/Irix Guy. And ring that bell icon when you do to be notified whenever I post another video. Thanks for your viewership, and y'all have a good day.